Hi, welcome back. This is Aditya from equityland.com, and firstly I want to thank you for becoming a member at equityland.com. And so this is a quick video on basically I want to help you understand the stock recommendations report which we publish every month, and how you can use how you should read the reports and make sense of it, and how you can make buying and selling decisions to improve your stock returns, basically your stock market returns. Okay, so we will also be going through, I'll take you through a couple of reports to help you understand exactly what to do, but let's go through the presentation which I have made on this. So when you see a recommendation report, what you will find is, first you will find introduction about the company. Second will be company facts about the business, what product they sell, what is the quality of the product, what is your market share, what is the size of the market. The next section is industry analysis. So how is the industry growing? So for example, if it's Bajaj Auto, how is the motorcycle industry doing? It's Tata Motors, for example, how is the luxury car market doing? If it's Colgate, how the toothpaste market is, how fast the market will grow, how it has been growing in the past, who are the competitors, what are the relationship between all the players, and so on and so forth, and what are the challenges, right? The next thing is the key growth factors. What are the factors the company depends on? I mean, are they dependent on the GDP? Are they dependent on the per capita income? So there are many factors that affect the growth of the company, right? So that's the next segment I generally take in my reports. After that is the company business factors, basically the business factors, business model of the company, and the competitive edge. What are the strengths of the company compared to the competition? And finally, it's analysis of the profit and loss and balance sheet. And after that, it's the valuation, at what price you should buy and sell, and how did we arrive at the valuation, and the recommendation as to what you should be doing. Now after you've read the report, right, what happens is the stock price keeps moving up and down every day, right? So basically you should be able to take intelligent decisions based on the reports. So the next thing you need to do is you need to take a look at the assumptions. So all the segments in which the report is broken down, right? After each segment there is an assumption, okay, about the company, which is basically, if we are assuming the company will grow at 8% per year in sales, right? So you need to keep that in mind. For example, if I say cigarette, for example for ITC, if I say cigarette sales are inelastic in nature and they will never go down, then you need to keep that assumption in mind. So there are generally around 5 to 7 assumptions in each report, and then how the impact of news flows. So every month or so you will get more news about the company, how the company is impacted by this news, how the assumptions are impacted by this news, and whether the assumptions are standing true or not, right? And then if the company's price is undervalued, then you can make a calculated decision to buy or sell the stock. The next thing is scenario analysis, which I will go through again, and the margin of safety. So let's just take a look at one of the reports, right? So let me just take you to the Equityland website. Okay, so you go to the website, and let's go into the stock recommendation segment. Okay, so here we have, firstly we have Bajaj Auto, we have Delta Corp, we have ITC, and we have Colgate. So let's look at Delta Corp, okay, because that's a classic example, because there's a lot of that, there has been a lot of action on that in the stock of that company, And okay, the first thing, okay, so the report was published on the 2nd of November. Okay, this is before demonetization. The 2nd of November 2016. Okay, today is today is August 8th of August in 2017, but still this report is still valid. So basically you can go back on previous reports and still use it as a reference point because the business model has not changed. Okay, so let's go through it. So firstly we have the introduction about the company. The company operates casinos, and then we have the facts about the company. These are the facts, okay, on which the report is based, right? Then I'm doing the analysis of the industry, which is the gambling industry in India. And this is the first assumption. So this is very important. So you need to always keep an eye on this assumption. The assumption is entry barriers to the industry are high, with government not easily granting new licenses. So for example, if there's news of the government granting new licenses or new casino licenses to any of the players, then this assumption has changed if tomorrow you get such news. But right now this assumption stays valid, because obviously the Goa government is very protective about giving out new licenses and the local population being engaged in gambling. There's a lot of political opposition, which is good for the company. So the next assumption is the Indian tourism industry will grow at 7 to 5%. Okay, so this is in the sector. This is the in the segment based on tourism in India. So the existing capacity, after that I've analyzed the business model of the company and how much so then we have assumption 3 that per person spends around 5,000. Again, this assumption you can test it every time the management comes out with Q3, Q4 or any interviews of the management, how much hours per person spends at the company. So if at all you happen to go to the casino, you can check this out as well. Or if the management says that the number of hours spent is going low, then again this report you have to adjust for, or basically this report is false and you can write to me and I will change it if I have not noticed it already and published a new article on it. And Delta Corp is operating 330 days in a year. So again, that is obviously, that's not going to change. Again, then the next assumption is capacity utilization is at 24%. Again, this will change going forward, so I'll have to publish a new report, but you need to keep that in mind. And so then we have the future growth prospects. So each section has assumptions, and I'm saying the revenue will grow at 23%. This is the next assumption. The profit margins also has an assumption. So you can test these assumptions every time there's a quarterly report coming on the company. So now when you arrive at the valuation, so again going back to our slide, after you read the report, you need to keep an eye on the scenario analysis, upper range and lower range, okay, and the margin of safety, right? So let's go back to the report. In this I have given a range of 130 to 697. So the lower range means everything is going wrong for the company, right? The company is not doing well, sales are dropping, it's a worst case scenario. Okay, then the price per share is 130. The best case scenario is the company is growing very fast, all the assumptions are doing really well, okay, it's not facing any competition. So in that case the valuation will be 697. Okay, so the lowest the share price can go based on current scenario is 130, and the highest it can go is 697. That's what these assumptions and this report is telling you. Okay, and finally I have given a recommendation with a valuation of 278, right? So if the share price, so what I'm saying is if the share price is below 278, that means the company is undervalued by 34%, and you should keep on buying the shares. Okay, on the 1st of November the share price was 182. Okay, so let's see what happened, okay, what really happened. So that will help you understand. So if I go to money.pdf, let me go to Delta Corp. Okay, so currently the price is 168. Okay, however, once I said if the price is below 278 you should keep buying. Let's see what has happened in the past 1 year. Right, so in the past 1 year the company has had a high of 218 and a low of 94.85. So it went down all the way to 94 and 218, right? So I was personally investing as well in this share, and if you see, okay, so my mouse pointer is right now in December. So in December the share price crashed because of demonetization, and then it went down all the way to 94. So there was news on demonetization and that will impact the company. Again, this has nothing to do with the assumptions, right? And it was just a great opportunity to buy more shares of the company. So if you lap up more shares when there is such a news and it is not affecting any of the assumptions, then it becomes really profitable. So if you kept buying as the price went down, your average price would have been around 120 or 110. And now as you can see the price is 168. So after it shot up, you are already sitting on a gain of around 30 to 40%. So a lot of people, a lot of gold members were basically writing to me in the comments. If you see the report on Delta Corp, we have a lot of comments here. A lot of people were asking what is the impact of demonetization and so impact of QIP, and what was it? Then there was news on basically there was news on whether Daman will become a part of Gujarat, and drinking and gambling will be banned. Again, I have answered that as well. So all these were great buying opportunities. The stock price is still undervalued, but it's a great buying opportunity. Let me just take you through the news, okay? So what happened in December is a classic case of a buying opportunity because it was extremely undervalued. It was below the lowest of the lowest. The lowest of the scenario was 130. So things could possibly go wrong from then. So Delta Corp, demonetization. Let me see if I can find some. Okay, so let's say, okay, 1 second. Let me just show you what came up in Economic Times. So this says demonetization hits gambling company investors. Okay, sorry, and a 45% crash in share price, right? So this is exactly what happened on the 15th of November, and all the way till December it kept going down. December 8th, right, that's when it was 95. So it was a great time to accumulate. So on this day the share price closed at 106. So again, and as soon as January came and they came out with their annual report, people realized that okay, so this is not really impacting the company and it should go up. So when there's fear in the market, it makes more sense to purchase. So that's how you use the reports to make buying and selling decisions. I hope this was helpful, and if you have any questions, please reply back on the email, or you can go to the discussion forum on the website and post a question there. Thanks a lot and keep in touch. Bye.